But what I want to talk about for the sector spotlight is just a few other areas to show you some support and resistance. One will be the Qs. So if you look here, you will see the Qs started to play some catch up. It was trying to hold up best, came down to its own support level, broke through. I would look at the low of Friday of around 52.32. If this doesn't hold, we could see 50 on the Qs. I would also then look at the best acting stocks in that group for clues. Can Apple go green? Can Baidu go green? Will some of the mega caps like a Cisco or Microsoft become value safety plays? If you look at another group, you look at the retailers. They were trying to hold up, but they also start to head lower. So if you look at the RTHs, you will see similar pattern here. Here's your head and shoulders. Left shoulder, head, right shoulder. We broke this neckline. We're at support 1. So look at the 98.61 level. If this were to break, you have a level all the way down to 95. This is scary times, guys. We're coming into charts that we have to look almost back a few years now. So this group also, I would say around 95 and change. The last sector is, I'll talk about the refiners, the OAHs. They were holding up best. But we talked about, lines in the sand to get out of your stock. If you're saying, oh, this is acting great, in corrections, everything goes lower. Just some things go down less because they show relative strength. If you look at these OAHs, they played catch up. They got pummeled just as quick. So the OAHs here, this group came below its support level that we were talking about as your way out. Okay, right here. You have Friday's low of just about 130, and then you have another really big level all the way down here, in that 120 area. So even though we've come off 13 to 15% off the highs, you still just can't jump in because you just saw that China, Brazil, the leading markets out there are down over 20%. Last year, we were 17% off the highs when we were just trying to solve some of these problems that the world was in denial about. Now the denial is becoming a reality, so that that's going to raise some fears, and we don't know exactly where we're going to go, considering that we're 100% off the 2009 lows, only about 12 to 15% off of 3-year highs. So there's a lot of room for mobility. There's a lot of room for movement. But if you approach this market with levels, if you say, I'm going to embrace the volatility, this could be one of the most exciting, profitable times out there if you get involved with the plan. I'll come back with some of those leading stocks after this commercial break.